Hello and welcome to another Smaulgld live stream. It is the 12th of September 2019 and tonight's topic, Mario Draghi says negative interest rates won't crash the system. It was a very big day in the news today, but you wouldn't know it by the final closing prices of the dollar, the euro, and gold and silver. The European Union today doubled down. They took rates into negative territory even further to 0.5%. So a 0.5% into negative territory. This time last year, they were talking about ending QE. They were talking about raising interest rates. Well, that's gone. They are now 0.5% into negative interest rates, and they rekindled their QE. They're going to do another $20 billion a month starting in November. So this Mario Draghi started, he's the head of the ECB, European Central Bank, in 2012 with his whatever it takes. Well, he's serious about that. And let's take a look what this man had to say today. It's astounding that this is the direction that central banks are taking us. They are saying that we're going negative, we're going to print money, we're going to buy assets, and somehow the market shrugs this all off. Now, earlier today, I did two podcasts, and somewhat on topic as well. The first one was why food lines are a good thing, why tariffs are a good thing, and why negative interest rates are a good thing. And Bernie made an appearance. That's a good thing. And it was somewhat tongue-in-cheek, but not really. And I was suggesting that in this sick economy, in this sick world, sometimes you have to go along with it, and you have to do things that otherwise wouldn't make economic sense. And that's what Trump's position is. Everyone else is going negative, and here they are, the suckers at the table with positive interest rates. And these other countries are presumably trying to help their economy, not realizing that long term they're destroying their economies. But that is a dilemma that the United States finds itself in. And the Fed meets, I think, next week. And now people are expecting them to have to cut rates at least 0.25 point. And some are starting to think maybe they have to cut them 0.5 percentage point. They'll still be well above negative territory. All right, so let's see what Mario Draghi had to say today. Now, I recommend you go back and check out those two videos. Oh, the other video was about Treasury Secretary Steve Mnuchin saying that they're seriously considering next year coming out with a 50-year bond. That's to kind of spread the risk out. Longer term, another way of issuing more debt. So clearly, central banks, including the United States and the U.S. Treasury, are thinking about more ways to issue debt and more ways to issue it at lowest rates possible. And that's probably the reasoning behind a 50-year bond, is that lock in low rates while they're low. However, the reason he's probably saying 2020 is he probably thinks that U.S. rates could go even lower, and then they want to lock in that 50-year bond. But let's get to what Mario Draghi had to say today. Now, he's of the view that, I don't like this view, but all the economists, the central banks, believe that you cannot have growth unless you have inflation. And even if you're having growth, but your inflation rate isn't where they want it to be targeted, then there's something wrong. They all say that they're in favor of stable prices. Well, to me, stable prices means no inflation. To them, stable prices means inflation is moving towards their target of 2%. But you can see it's almost a self-fulfilling prophecy. They have their economic growth rate. It's tracking along around the inflation rate. So they think that if they just juice the economy with QE and lower rates, then maybe they can get the inflation up, and maybe that inflation is going to cause economic growth. But that's basically how they look at things, and therefore that leads them on this trail of ever lower rates and more QE. Also, Draghi's point was, in spite of all them doing these dramatic monetary maneuvers, negative interest rates, buying whatever assets they can with money they print out of thin air, they still don't think there's a probability of recession in the euro area. They say it's small, but it's gone up. And, of course, they're saying, we will be aware of the side effects of our monetary policy, and we are closely monitoring all these effects. Well, what the hell else are they going to do? Of course, that's what they're doing, and they should be aware of the damage that they're doing, but that's Mario Draghi. Okay, now, the other thing that Draghi pointed out was there's only so much that monetary policy can accomplish. There's only so many bonds we can buy. There's only how low we can lower interest rates. But at some point, the fiscal policy. Yes, you have to have the fiscal policy has to jump in. Now, what does it mean by fiscal policy? A lot of people don't know the difference between monetary and fiscal policy. Don't worry, John, if you're in good company, JFK never knew the difference either. Monetary policy is what the central bank does, what the Fed does. It's the setting and raising and lowering of interest rates, and now buying bonds or whatever they want to buy with the money that they print. Fiscal policy is essentially what the legislative body in the United States does, which is allocate money, and that could be done via tax cuts. It can be done by subsidies. It's what the law does, not what a central bank does. And what Mario Draghi is saying is that there's only so much they can do. And there were some questions like, why don't you just do some helicopter money and hand the money out? And he essentially said, here's a quote, he said, let's keep in mind all the time that giving money to people in whatever way is a fiscal policy. So he's basically saying we can't do it. We got to do it fiscally. The problem with doing it fiscally is that there is no European-wide fiscal policy. Every country at least still has some control over their finances, although they have to keep in line with some of the ECB dictates. But again, he keeps harking back to the fact there's only so much they can do. I repeat myself, fiscal policy, that's the issue here. You know, we're doing QE, we're lowering interest rates. So essentially what he's saying is that he's not arguing for tighter fiscal policy. He's basically saying, look, if they want to if they want to, like, in their countries hand out money, that's up to them. That would be a good thing. Basically he's saying that would take some of the pressure off of us to try to manipulate the economy and try to create this mythical inflation. Then he says, look, we are very concerned about the pension industry and related services. Negative rates are necessary instruments of monetary policy. Let that sink in. Negative rates are necessary instruments of monetary policy. It has created a lot of positive effects. No, it hasn't. How do we speed up these effects so that interest rates can go up? The answer is fiscal policy. Okay. Again, he's urging the fiscal policy to be profligate so that they can raise rates. Now, it's a lot to unload there because he's saying negative rates are necessary and they're good and there's a lot of positive effects, but he kind of is admitting or realizing that those positive effects are temporary and you can't have negative interest rates that long, and we need to raise interest rates, but we can't do that. He realized the bind that they're in, and they want somebody else to blame, so they want the fiscal policy to be spending money, handing out money, doing whatever tricks they might do. Amazing that he's saying this, and as this decision comes out, gold and silver shoot up, the dollar goes up, the euro plummets. By the end of the day, you look at the numbers and euro rallied, gold and silver fell back, the dollar fell back. So I guess they don't want people losing confidence in the ECB. So it looks like that all those gains, the natural reaction to what this nonsense that Draghi is proposing and actually implementing, he's moved into further negative rates to negative 0.5%, another 20 billion on the QE side. And then he has the nerve to say, but don't worry, negative rates will not provoke the collapse of the financial system. I love that one. Negative rates will not provoke the collapse of the financial system. Yeah, so you're lighting off fireworks in someone's house and you're saying, do not worry, and the fireworks will not burn your house down. Don't worry at all. I repeat, the fireworks, they are necessary tools for you to see light in your house. but they will not provoke a collapse of your house or cause it to burn down. Wonderful Mario Draghi. But will QE do that? And he didn't say anything about QE. He's saying that these things are wonderful things. Now, if you remember the central bank's view, or at least the Fed's view towards QE is, they've never done negative interest rates at the Fed, by the way. They've only done QE. They don't view that harmful at all. In fact, if you remember, when we did the review of their minutes, they were basically saying, yeah, we printed a lot of money, we did a lot of QE, and we should have done more, we didn't do more. There weren't really any problems with it, so now we know how to do that. We're really looking forward to when we have to do that again, and maybe we can buy some other assets that we didn't consider buying. These guys are out of there. Pretty soon they're going to say negative interest rates not only are necessary, we don't need them to go back up. All right. And then I love this quote. The European economy is a bank-based economy. Now that's, if there is not a bigger tell, that's how he thinks Europe runs, and he's probably right, is based on all this monetary policy and the banks. Congratulations, Mario, for setting it straight, letting us know what Europe's all about. It's a banking economy. And then he finished off with, what else can he say? We stand ready to adjust all of our instruments as appropriate to ensure the inflation moves towards our aim in a sustained manner in line with our commitment to symmetry. Whatever that means, he stands ready to adjust the instruments. So he's going to adjust the instruments and make sure it's appropriate to ensure that inflation moves towards our aim in a sustained manner in line with our commitment to symmetry. If you know what that means, I don't know what that means. That means he's going to do what he feels like doing. If he thinks he needs to do something, they're going to do it. Now, Donald Trump, what is his reaction to all this? Now, remember, the other day, he called the Fed boneheads. Here's the quote. The U.S. should always be paying the lowest rate, no inflation. It's only the naivete of Jay Powell and the other Federal Reserve that doesn't allow us to do what other countries are already doing, i.e. lowering interest rates and printing up money and buying assets. A once-in-a-life opportunity that we are missing because of, quote, boneheads. Boneheads referring to Jay Powell and co. over at the Fed. The other thing he was saying, and it looked like Mnuchin today at the Treasury backed him up, was not only does he think that the U.S. should be paying lower rates, he says the Federal Reserve should get rates down to 0 or less, and then we should start to refinancing our debt. Interest costs could be brought way down. And then he says, while at the same time substantially lengthening the term. That's your 50-year bond right there. Substantially lengthening the term. So, Donald Trump, here's this Mr. Draghi explain the quantitative easing and the salubrious effects it's going to have on Europe. And here is Trump's reaction. Well, he's proud of Mario. European Central Bank acting quickly cuts rates 10 basis points. They are trying and succeeding in depreciating the euro against the very strong dollar, which turned out to be not the case today. The dollar actually, by the end of the day, was down. The dollar index is at 98.42 right now, which is down. At one point, it had been over 99. It went straight up. It went from like 98.58 all the way up to about 99, and then boom, looks like somebody said, we cannot allow this to happen. So boom, down went the dollar index, and up went the euro. Down went gold and silver after rising. That was down goes my phone as I was looking at it. And the Fed sits and sits and sits. Says Donald Trump, they get paid to borrow money while we are paying interest. That's factual. And again, if you listen to, I urge you to go back and listen to today's podcast, why food lines, negative interest rates, and tariffs are good things. And it is somewhat of a modest proposal, but I made the analogy that no one would have their arm chopped off or would volunteer for chemotherapy if they didn't either have gangrene or cancer. But if you do have those maladies, you probably want to consider those things, and I think that's probably where we are. It wouldn't make sense to do these things in a normal, healthy economy, global economy, cutting rates into negative territory, doing QE, but at this stage of the game, what else is there to do other than an entire debt jubilee, which I'm not sure we can get away with. All right. So that's Donald Trump's reaction to all of this that's going on. Meanwhile, in China, China to crush the dollar. Game over. They've had it. Gold back, yuan, petro yuan. All of the gold pumper stories about how China's this and China's that, and they like gold. They understand gold, and they read Sun Tzu, and they're strategic, and the United States is dumb, and they just spend money, and China just buys gold. Yeah, well, in these tariff wars, China didn't have much to slap tariffs on the United States. Remember, the United States buys a lot of stuff, some of it essential, some of it just stuff that you don't necessarily need. But China didn't buy as much stuff from the United States, and the stuff that it bought was stuff that it needed, like oil and pork. I mean, they got billion-plus people that need to be fed. And the United States got pork farmers, and we were sending them, the United States was sending China a lot of pork. So what did China do? Okay, well, you're going to put tariffs on us. Well, we do the same to you. And that's like shooting themselves in the foot, because while the United States probably doesn't need, refrigerators are important. There's a lot of important goods that come from China. But there's also a lot of goods that if you didn't have them for 6 months, you wouldn't notice. But try going without pork in China for 6 months. Or try what's happened in China. Price of pork is, I think, doubled in 3 months or some ridiculous amount. So China had put tariffs on pork, or it stopped the importation of pork. I don't know which it was, but they either way, they had reduced their consumption of U.S. pork, which meant they were getting less of it either because of tariffs or because they just stopped buying it. Well, then they decided, oh, okay, as a quote, as a gesture of goodwill, maybe they're going to buy more U.S. pork. And I took a picture here of this big ship being tossed about on the ocean, saying about that big life raft order we canceled. It's not like China's doing the United States any favors. They really can't allow the pork prices to go higher. They can't have starving people. They're not really, and it just highlights the relative advantage that the United States has in this quote trade war, because it's not. They're not in equilibrium. The Chinese do have more tariffs on U.S. goods than the U.S. have on Chinese goods, and it's simple as that. And that's the point I was making in the blog post or the podcast earlier today, why food lines, negative interest rates, and tariffs are a good thing, is even Adam Smith said, and I go through this and that, and I urge you to take a listen to it, that there may be times where he's against tariffs because it doesn't make sense to do tariffs, but there may be times where retaliatory tariffs may make sense if they lead to an ultimate rearrangement of the trade amongst nations. But in general, he says, and he's right, it makes no sense for China right now, it's exactly his point. It makes no sense to pay more for stuff that you can get cheaper elsewhere, either it is an individual or a country. So it really made no sense for China, in this case especially, to stop buying U.S. pork when they don't have enough of it. But that's where we are in China. So again, you've got China and the United States. This is not a good situation, even if it gets sorted out, even if the two walk hand in hand and they figure out, okay, we're going to trade, we're going to remove tariffs, and you send us your good stuff that you're good at, and we'll send you our good stuff like pork that we're good at. We'll send you oil, you'll send us trinkets, you'll send us computers, you'll send us refrigerators, and we'll even send you cars. That's still not going to solve everything that's going on in the financial system. It's not going to solve China's debt-based Ponzi scheme. It's not going to solve what Mario Draghi is doing. It's not going to solve the pension issues in the United States. It's not going to solve any of the debt issues around the world. So let's see what you guys are thinking in the comments. And I do want to thank the new Smaulgld patrons, the new Smaulgld Subscribe Star members. You feed Smaulgld and he feeds you more content. It's 3 today and 3 yesterday. We've done quality videos, not just putting together something. We've got all the charts and we've got all the data and the information. So thank you very much for supporting Smaulgld. I'll leave up the page right there if you want to become a Smaulgld patron, or you want to join Smaulgld Subscribe Star, you want to make a one-off payment by PayPal or recurring payment by PayPal. All your information is on the screen below this BitChute, below this YouTube, and of course on Smaulgld.com. I want to thank the people who purchased mugs yesterday. Thank you very much. I did ship those out this morning. And those of you who are shipping or sending, holding up your phones to those QR codes for Bitcoin and Litecoin donations to Smaulgld. And also, I love going to the mailbox and receiving your letters and, of course, checks, items of value like silver and gold and cage. That's Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. I really do appreciate all the recent surge in support. I guess you have to mention it, otherwise you don't get it. But I do appreciate those of you who are supportive of this channel, because you do get different information on this channel, information you don't get elsewhere. All right, now this time we're missing the chat. There they are. Okay, who do we have here? Who do we have here today? We got Max, we got Anne. Anne likes the Italian accent. Yeah, very nice. Philip Quinn is here. China needs pork, says Matt. And Mike Herney says, I like your silver talk 2 days ago. We have a very small audience, and I guess you're burned out on Smaulgld. We already did 2 talks today, but this is a very small audience for tonight. And if that's all we have, I may have to call it an evening. And tomorrow I've got some stuff on Bitcoin. I've got some stuff on Litecoin. I've got a lot of stuff coming up. So if you haven't subscribed to this channel or BitChute, YouTube, or Smaulgld, please do so. And if not, I'm going to let you go. It'll be a short night tonight. Yes, indeed. Have a good night. That's a good thing.